Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, March the 10th. The year's 2021. Let's talk trading. Reasons not to enter a trade. Just remember, these videos are for educational purposes only, and your results may differ from mine and from Walmal. One of the things, reasons not to enter the trade. If you're familiar with the confirmation bias, what happens a lot of times to traders is they have an idea what they want to do, whether they want to go long or go short. Well, then they look for all the reasons that confirm their bias at the moment. They don't look for the reasons that could be staring them in the face that's saying, no, you better not do that. So Walmal and I are going to go over some of the reasons why you shouldn't trade. So Walmal, when you were trading today, and I remember you saying something about, well, I got all the signals, but I'm not going to take that trade. And so that's what caused or gave me the idea for today's topic.
Yeah, and that can happen. I got a little. I used to actually have a little piece of paper that sat next to me on a, and I actually cut them up the size of an index cards. And every time a condition that I needed for taking a trade was met, I'd go and literally draw a line right through it, say, okay, made that condition, made that condition, made that condition. Okay, push the button and trade, and it works. No doubt about it. But what I wasn't taking into account is, well, what if there's something else that's a reason not to trade it? Now, sometimes I still take the trade. If I have, 10 reasons to take the trade and one reason not to take the trade, sometimes I'll still take the trade because when we trade, what are we doing? We're taking a chance. So sometimes I'll go and do that. But if I have, let's say 5 reasons to take the trade and 4 reasons or 3 reasons or even 2 reasons not to take it, you know what, it's probably better to hold off and just not do it. And if I remember correctly, Lamb it was that trade that we were looking at was what we call a DSR trade, a dynamic support resistance trade. And Lamb was all things led up to, hey, I've met all the 3 conditions. And I know that you put out an indicator out there, the ready, set, go indicator.
Okay, go ahead.
And so, all the conditions were met for ready, set, go. But then, just as a last moment type thing, I went and looked to the left. And when I looked to the left, I saw something on the chart. And I don't recall what it was, but it just said, nope, not going to do it. It's just not a thing. And I'm glad I didn't take that trade because I would have gotten slammed. And that's the thing. Methods are great. They provide a trigger for getting into a trade. But you also need to use your head and use your brain and pay attention to what you're actually seeing. What is the market doing? And that can get you into trouble. There's on the YouTube channel, I know there's a trader out there that I've been having dialogue with, back and forth as to when to take a Walmal trade, when not to take a trade, and he's asking great questions, and that kind of triggered this whole idea in my head. Would you do this? Would you do that? And it's actually made me think a little bit about my trading, especially with the Walmal method, because sometimes, to be honest, when he asks a question like that, I don't know. I don't know if I take the trade or not. And it's just because, what else is going on in the market? How is the price moving? It's the type of thing. If I'm going, let's say, like right now, price is around 93 or so. And, let's pretend that our short for Walmart would have been at 90 as opposed to the double zero. And looking at this price action, would I take a trade if it crossed this? I don't know. Maybe, and if I took it, I'd probably be looking to get out pretty quick. And the reason why is because if you just look back over the last, 6, 7 candles, it would go across that line, and it would go across it maybe 1, 2, 3 pips, and then immediately just go and retrace back up above it. And we had a pretty big movement up through that line. So I'd be the type of thing where, yeah, it meets all the criteria. Okay, we're waiting for the second M5 candle. We did cross the line. We would be going with the H1 candle color, so we met all those conditions. But at the same time, look at the price action. What has price done over the last half hour or so? Price over the last half hour or so, it goes and crosses it, certainly, but it crosses it only by, three pips or so, and then gets rejected off of that level. So would I still take the trade? Sure, maybe, but the difference is that when I go and take that trade, I'm going to have a different mindset. I'm not going to be looking for 10-5-1. I'm going to be looking for 1, 2, or 3, and that's it.
Yeah. I definitely agree because I've got the M1 chart up here with the DSRs and the Walmal lines and, our smart ranges. And if you can look and see over the past hour or so, we've been ranging between 38.80 and about 39.05.
Yeah, and we're smack in the middle of all that. So there's money to be made. Certainly there's money to be made, but at the same time, you got to be smart. Where has price had a problem before? And right now we're at a level right here at the 94, 95 level. If we just go and look left on the chart, we notice that, it's crossed that line certainly, but it's rejected that line, twice pretty hard. So it's the type of thing where, I wouldn't be looking to go long right at 95. The reason why I bring up 95 is because I know some people use the Walmal method and actually use the 5 lines. I don't, but I know some folks out there have. But that would be a line that I would say, you know what, I'm just not going to go and do that. It's not safe for me to go and take that trade.
Yeah, so for example, you might have a setup that's long, that's what you want to trigger long, but maybe you look up and you go, wait a minute, the week is down and the day is down, and why am I going long here?
Or, if it's the only, the counter argument to all that is, of course, at the end of the day, usually price tends to go and run back towards the middle a little bit. Now, I'm not saying it retraces the entire day, but it'll run back, and that's the idea, Tiro, of your rat trade. We know that it goes and hits a bottom for the day, and then what does it do? It tends to go back in towards the middle a little bit. Well, maybe that's the time of the day we're looking at and saying, hey, okay, we're this late in the day, and we've extended more than what this smart range to say that a normal day goes and does. Hey, that's a great time to be looking, not necessarily maybe for a Walmal trade, but maybe looking for a different type of trade. So if I get a Walmal trade that says to go short, and at the same time we know that we've gone as far as the day usually goes, and we're towards the end of the day, well, maybe the short's not the best thing to go and look for. Maybe you say, you know what, yeah, I went and crossed that line. That would be a definite Walmal trade. Maybe I just don't take that trade. And, and the thing is, you may kick yourself at the end of the day and say, man, that could have been a really beautiful trade. But at the same time, we're trying to trade with statistics. And statistics has told us that, towards the end of the day, the markets tend to move back towards some type of equilibrium of some sort, and that's what we're going to count on. We're going to not just look at, the Walmart trade and say, hey, there's a 00 there. We're going to go and cross that and let's just go and run that or whatever.
Yeah, because the 00 cross to the north the past couple of times definitely was only good for a couple of pips.
Right. And the thing is, I think, I went and took it once or twice, but when I took those trades, because I saw what happened in the past, it was type of thing. My finger, I had my 10-5-1 set up in my EA. I have an EA that goes and just manages a table of where to get out of the trade and such. But, my finger, even though that was all set up, my finger was set up on that close button. So as soon as I went and saw, 2 or 3 pips, and the moment I went and saw, that price starting to go and react funny, punch out. I'll take my 3 pips, and I'll be happy. And, sure, it could have shot off to the moon at that point in time. But, at the same time, I also have to go and learn from experience. A lot of times what we're doing here in trading is, we're looking at patterns. We're looking at what price has done. And price does those things because, for whatever reason, at a particular level, let's say somewhere around, 90, 39.04, 39.05, for whatever reason, over the last hour or two, the market has determined that that's a very high price. So why am I going to try to go and try to get more than that if everybody thinks that's a high price? Would you go into a car dealership and try to buy a car above list price? or would you go and try to go and buy it below that? And that's the kind of thought that I have. And I know a lot of people will poo-poo that idea that the market's not like going and buying a commodity, but I still look at it at the end of the day, the idea that I'm trying to buy low, sell high,
Well, some people say buy high, sell higher.
Well, that absolutely, you can definitely do that, as long as all the other things are in place. Now, here's the thing, if we didn't have those rejections at that 05 level, yeah, my finger wouldn't be on that button. I may even go say at that 05 level, I've reached that and got there in a really nice way, and the price looked like you got up there, pretty nicely. I may go and add in on the buy at that point in time. So yeah, that'd be, buy low and then buy at the next place that's higher, but it's still a low price.
Well, I mean,
to where I'm going to sell off.
Yeah, and if you look here, we got the daily open line on my broker at 38.82, and you see it crossed it once, twice, 3 times, and then each time it crossed it shot up by at least 10 pips. I mean, those were trades to be had. Right.
Yeah, and that's take advantage of those things, and it's at the same time take advantage of those things, but also we're talking about here reasons not to trade. Well, if I'm coming in, at a particular level like the daily, and we know that price reacts to it, but it reacts in X number of pips, you know what? Maybe I go and set my TP at, X minus 2, X minus 3. That way I, get out before the price reacts at that level, and it just gives you a reason to get out, or if it looks like, hey, my whatever method I'm using says to go long there or go short there, depending on which side of that line you're at, and you know that it's reacted at that level and it's only reacted by 4 or 5 pips, maybe it's not time to go and take that trade. Hold off on that trade, until you get something that's a little bit more confident, that you can go and take advantage of.
Yeah, because we're talking about reasons not to trade, and it's funny because on the chart you were talking about the 95. Price just rejected. Now it's at 89. And
right.
So there so the reasons not to go long, you can see here, it came up to this level about 3 or 4 times the past couple of hours, not including the most recent one, and it just hasn't busted through. So,
right.
Maybe your indicators are saying, hey, well, this is a breakout. I got a 2 ball here. It's going to make another 3. But as you can see, price got rejected, and that's just, it's like you're just looking and paying attention to what's happening. You're trading what you see as opposed to what you think or what you want.
Right, exactly. And sometimes, hey, we've seen this a number of times, and one of the things that, you've got an expression you say all the time, and that is that it works till it don't, right? Well, here's what I probably would have done was when I got to that level, if I was in a long, let's say I got in at 90, I probably would hit my reverse button. So that would take me out of my long and put me into a short, and just take the chance. And here's the reason why I do that, because at that point in time, I would have been up 5 pips. I didn't hit the reverse button. That means that, I'm taking a chance here, but at the same time, I've seen it time in and time again over the last couple of hours. Hey, you know what? Take a short there. And worst thing that's going to happen is I'm going to let it go as far as 5 pips underwater, which means that between the 2 trades, I broke even. I don't want to go break even, but at the same time, I'm taking a chance, and just based on what I've seen, I'm going to go and take the chance there. And if I would have done that, could have picked up 5 pips in the other direction. Oh, look at where the price is right now. It's down at 88. What has it done at 88 in the last hour or two? It's rejected that level. Maybe you go and try to go the other direction now. I don't know. But that's how you can go and play that.
Yeah, so fellow traders, the fastest 15 minutes in trading is up once again. We'll probably revisit this topic, reasons not to trade, and if you've got any good reasons, put it in the comment in the video. So as you're trading, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.